Hello everyone, we are going to discuss about the previous year questions of corporate accounting. Two from University of Madras in April 2012 part C. This question is from bank accounts. Let me read the question. On 31st December 2010, the following balances stood in the books of Bharati Bank Limited after preparing of its profit and loss account. Share capital issued and subscribed rupees 4,000. Reserve fund section 17 rupees 6,200. Fixed deposits rupees 42,600. Savings bank deposits rupees 19,000. Current accounts rupees 23,200. Money at call and short notice rupees 1,800. Investments rupees 25,000. Profit and loss account creditor 1st January 2010, the amount is rupees 1,350. Dividend for 2009, the amount is rupees 400. Building rupees 2,950. Cash in hand 380. Cash with RBI rupees 10,000. Cash with other banks rupees 6,000. Bills discounted and purchased rupees 3,800. Loans and overdraft rupees 51,000. Bills payable rupees 70. Unclaimed dividend rupees 60. Rebate on bills discounted rupees 50. Short loans in bracket from other banks rupees 4,750. Furniture rupees 1,164. Other assets 336. Net profit in 2010, the amount is rupees 1,550. Prepare balance sheet of banks as on 31st December 2010. So based on this information, we have to prepare the working notes for preparing balance sheet of bank accounts. First, we have to mention the schedule number 1. Schedule number 1 is capital. Issued and subscribed share capital rupees 4,000, that's all. Schedule number 2, reserve and surplus. So under the schedule number 2, reserve fund rupees 6,200 from profit and loss account 1/1/2010, the amount is rupees 1,350. This is also from the question. Then less dividend for 2009, the amount is rupees 400. First we have to deduct the dividend amount from the profit and loss account. So 1,350 minus 400, we get the balance profit and loss account is rupees 950. After that we have to add net profit for 2010 after deducting statutory reserve. Statutory reserve is mandatory for all the banks except Reserve Bank of India. So that statutory reserve must be at 25% from the bank's profit. So the bank's net profit is 1,550. Multiply with 25 divided by 100, we get 387.5. So that is statutory reserve. So we have to deduct that amount from net profit of the banks. So 1,550 minus 387.5, we get 1,162.5. So that after deducting the statutory reserve, the balance net profit for 2010 amount will be added with the above balance net profit of 1/1/2010. So 950 plus 1,162.5, we get 2,112.5. And we have to mention the statutory reserve, which we have already calculated from the net profit of the bank. So 1,550 is the net profit of the bank. Multiply with 25 divided by 100, we get the statutory reserve amount is 387.5. we have to mention in the outer column. Then we have to add all the outer columns amount, 6200 plus 2000 plus 2112.5 plus 387.5. We get the total amount of 8700. So that schedule number 2 total is 8700. So look at the note. As per the RBI regulations, all the banks should keep statutory reserve of 25% from their net profits except RBI. Then schedule number 3 is deposits. Under schedule number 3 we have to mention fixed deposit. The amount is rupees 42,600 and the savings bank deposit rupees 19,000. Current accounts rupees 23,200. We have to add this amount. We get the total amount is 84,800. That is schedule number 3 is the total. Then schedule number 4 is borrowings. Under schedule number 4 we have to mention short loans. The amount is rupees 4,750. That's all. Under schedule number 5 is other liabilities and provisions. So under schedule number 5 we have to mention bills payable, unclaimed dividend, rebate on bills discounted. The bills payable amount is rupees 70. The unclaimed dividend is rupees 60. The rebate on bills discounted amount is rupees 50. So the total amount is 180. 70 plus 60 plus 50, we get the total amount is 180. That is schedule number 5th total. And schedule number 6 is cash and bank balance with RBI. Cash in hand rupees 380, cash with RBI rupees 10,000. The total amount is 10,000. The total amount is 10,380. That is schedule number 6th total. Then schedule number 7 is balances with banks and money at call and short notice. Under schedule number 7 we have to mention money at call and short rupees 1,800. Cash with other banks rupees 6,000. The total amount is 7,800. That is schedule number 7th total. And schedule number 8 investment. The investment amount is rupees 25,000. That's all. And schedule number 9 is advances. Under schedule number 9 we have to mention bills discounted and purchased rupees 3,800. Loans, cash credit and overdraft rupees 51,000. The total is 54,800. It means 3,800 plus 51,000. So the total is 54,800, and that is schedule number 9th total. And schedule number 10 fixed assets. Under schedule number 10 we have to mention premises. The amount is rupees 2,950. Then furniture, the amount is rupees 1,164. We have to total this amount. So 2,950 plus 1,164, we get 4,114. That is schedule number 10th total. And schedule number 11 is other assets. The other asset amount is 336. That's all. And schedule number 12 is contingent liabilities. Under schedule number 12, bills for collection. No amount in question, so that is why we need not to mention any amount in it. That is called a nil. Now we are going to calculate the balance sheet of Bharati Limited as on the date of 31st December 2010. First we have to mention capital and liabilities. Under this heading we have to mention capital. Capital means the schedule number 1's heading. So as well we have to mention where can we get it. So it is from the schedule number 1, and after that the rupees column we have to mention the schedule number 1 total. So once again I tell you, So first we have to look at the working note. The schedule number 1 heading is capital, so we have to mention in the particular column as well. So where can we get it? It is from the schedule number 1. So in schedule number column we have to mention the schedule number 1, and we have to take the schedule number 1 total only, not any amount. So the total would be 4,000, which we have to mention in the rupees column. The same thing we have to follow all other things. So reserve and surplus, it is also schedule number 2's heading, so we have to mention in the particular column. So and the schedule number 2 we have to mention in the schedule number column. So the schedule number 2's total is 8,700, and schedule number 3's heading is deposit, we have to mention in the particular column, and we have to mention as 3 in the schedule number column. So the schedule number 3's total is 84,800, which we have already calculated, and the schedule number 4 and the schedule number 4th heading is borrowings, and the schedule number 4 will be mentioned in the schedule numbers column, and the schedule number 4th total is 4,750, and the schedule number 5th heading is other liabilities and provisions, and the schedule number 5 which is mentioned in the schedule number column, and the schedule number 5th total is 180. So schedule number 1 to 5 for capital and liabilities, that is why we have to add this amount. So we get 1,02,430. It means 4,000 plus 8,700 plus 84,800 plus 4,750 plus 180. We get the total amount is 1,02,430. Then we have to mention the assets in the particular column. So under the assets we have to mention cash and bank balances with the RBI. It means schedule number 6th heading, and schedule number 6 will be mentioned in the schedule number column, and the schedule number 6th total is 10,380, and the schedule number 7th heading is balances with banks and money at call and short notice. So the schedule number 7 will be mentioned in the schedule number, and the schedule number 7th total is 7,800, and schedule number 8 heading is investments, and the schedule number 8 will be mentioned in the schedule number column, and the schedule number 8 total is 25,000, and the schedule number 9th heading is advances. Schedule number 9 will be mentioned in the schedule number column. Schedule number 9th total is 54,800, and the schedule number 10th heading is fixed assets. So the schedule number 10 will be mentioned in the schedule number column, and the schedule number 10th total is 4,104, and the schedule number 11th heading is other assets. So the schedule number 11 will be mentioned in the schedule number column, and the schedule number 11th total is 336. Then we have to add all the assets items from schedule number 6 to schedule number 11. We get 1,02,430 as the total assets. So it means 10,380 plus 7,800 plus 25,000 plus 54,800 plus 4,114 plus 336. We get 1,02,430 as total assets. And schedule number 12 is a separate one. We do not take that amount or add this amount with assets or capital or liabilities. So that is why it's a separate one. We have to mention separately. So schedule number 12th heading is contingent liabilities. No information and no amount is in question, and bills for collection, there is no any schedule number, so that is why just we have to put as hyphen, and no amount is in question, so that is why we have to mention as nil for both category. That's all.